lining up all the ducks in a row to make you a more profitable trader. How does that work? Let's talk about that and more right now. Hi Forex traders, it's Andrew Mitchem here from the Forex Trading Coach with video and podcast number 326. And I want to talk about how you can become a better and more profitable trader with consistent trades by lining up all the ducks in a row. So let me explain more about that. You see, trading is all about probabilities. There are no certainties in trading. And the other thing that you have to work out that when you are wanting to become a trader is you need to have a plan and you need to stick to it. But how do you create that plan? Like, what do you do in order to create a plan? Because everybody says, hey, you need a plan to become a good trader. Well, where do you start? What do you do? So I've got some really beneficial and realistic practical tips to help you with this. Because like I said, trading's about probabilities. Nothing is certain. You can have the best looking setup and it won't work. You know, it's not absolute guaranteed to work. You know, nothing's really guaranteed in life, is it? You know, you probably have to go to school when you're a child. You probably and should be paying taxes when you're an adult, and you are going to die. And so really the last one's the only certainty. But in trading, you know, there are no certainties. You can have absolute, you know, everything looking really good. Doesn't mean to say it's going to work. But if you do that often enough with the high probability behind you, then chances are you're going to do really well as a trader. So getting all that lined up, everything lined up is really, really important. And I was on a webinar last night with my clients, and I was discussing with some of my more experienced and more successful clients about what they do to line up all the ducks in a row. And it's really interesting about the philosophy that they have, and what we are looking at here is getting all the different time frames lining up. Now, I'm not saying go through your MT4 charts and get every single one lining up absolutely perfectly, because, you know, that's not going to happen. But what we're saying is at the beginning of the month, look at your monthly charts and write down a list of likely directions of where you see strength or weakness, your bias for the bigger picture, the monthly directions. It's a real simple exercise. You just need to do it once a month. It might take you 10, 15 minutes once a month. And then at the beginning of the week, do the same on the weekly charts and try and line up pairs that have the same direction or potential same direction as the monthly charts. And then on a daily basis, we then scale down and write on the membership site. And we also put the weekly charts, but also the daily charts with specific trades. But if you have the daily charts lining up with the weekly charts and that lines up with the monthly charts, then surely that has to start to line up a few ducks in a row there for you. Now, of course, you don't just randomly go and say, oh, the monthly's looking like it's heading down, so's the daily, and so's the weekly, and now the daily. Just take a sell trade. That's not what you need to do. It's to say the likelihood is everything lining up to say this currency pair is heading down. You still need to see a technical chart setup based on all the other factors that we use for a strategy. But it's giving you that bigger picture bias. And there's nothing better to add to that than having something like a round number. Now, I call round numbers any trading price that ends in 00 or 50. I don't look at any of the others. It's 50 or 00. The 00 has been the exceptionally strong level. Now, you take the US franc for an example. So here we are in June 2019. Go and have a look at the US Swiss franc. It's just crossed below 1. So 1.0000, a massively strong level. So on my webinar, I suggested a sell trade based on the 12-hour chart. And we have the ability to trade offline charts, so just like 12-hour charts. A sell trade on the US franc because it had come up to the 1 level, gone just above it, closed back below it, had that level to protect the trade as a stop loss. And we had all of a sudden, after we took the trade, we had a small retracement, and then the currency pair, the US Swiss franc, dropped away really well. And you go look at your monthly chart. The US Swiss franc, based on the close of May, was heavily bearish. The weekly chart of last week, although last week's did pull back a bit, overall we're still looking at bearish patterns based on where the weekly chart is in relationship to other things we look at, Bollinger Bands, etc. And this week in particular, we are starting to see the weekly chart go bearish again. The daily chart's bearish. Everything's suggesting bearish. Plus we have a chart set up. We have a pullback. We have exhaustion. We have a huge round number. You cannot get bigger than 1. You know, it's a massive round number on the US Swiss franc. And the candle pattern was there. There was everything we are looking for. Plus we lined our ducks up in a nice row with our weakness in the US Swiss franc. And guess what? We had a highly profitable, very low risk, high reward to risk trade. So I hope that helps. Lining those ducks up in a row will help you with probability, and the likely outcome is very, very good. If you like our help with finding out about more about trading and how we can help you, how you can join our 5-star Forex Trading Coach course, just drop me an email, andrew@theforextradingcoach.com, or have a look on my website, theforextradingcoach.com, and we'd be more than happy to help you. So once again, this is Andrew Mitchem at the Forex Trading Coach. I'll see you this time next week. Bye for now.